I want to move on to another news item, but then to kind of flow into our portfolio here. We had earnings from Taiwan Semi. It's a company that's in the portfolio, one of the, I think, most important stocks in the market, one of the largest stocks in the market. I wanted to hear your takeaways from Taiwan Semi. It was a positive earnings report. Did you, in terms of the market and the stock traded up, did you have the same takeaway from their earnings?
Yeah, headline definitely very, very positive, because Taiwan Semiconductor is now one of the largest bellwether stocks in the market. You know, if we used to look at how GE would report for signs of broader industry focuses. Now, Taiwan Semiconductor, what they're saying is going to give you amongst the best insights into the trajectory of AI. Should be noted too, we have 3 stocks we've invested $25,000 in. That's NVIDIA, Marvell, Taiwan Semiconductor. We have 1 stock we've invested $35,000 in, Broadcom. That's about 50% of the portfolio, all really targeting opportunity around what you call AI accelerators, the processors for AI. That outsized bet has been very good for us, because when you're building out like AI from soup to nuts, when you're starting from the, okay, we want to do AI, to the last expense items. The first expense item is buying the processors, starting to get those orders in. The last expense items are a lot of the things like, we need to build a nuclear power plant that's going to take a decade, right? So one of the areas is, if AI is on the right trajectory, you're going to see generally good performance. So let's look at Taiwan Semiconductor. Headline that you'd read about in an earnings report: beat on revenues, beat on earnings, guided to a significant degree ahead of Wall Street next quarter. That's always going to get a good reaction. Now, when you dig into the details, another layer, they said that AI accelerators, that market that I said we've been targeting, tripled in 2024. They expect another double in 2025. David, when you triple and then double, that's effectively what NVIDIA's stock did. Numbers just get very big, very fast. And up to recently, the expectation was more for 50% growth. They're saying 100% growth. They're also forecasting a mid-40s compounded annual growth rate for AI accelerators off the already very high base that they had in 2024 throughout the coming, I believe it's through 2028 or 2029. And Taiwan Semi, they said that these AI accelerators are now their #1 growth market. So that's all very bullish. The company itself, they said they're going to grow at 20% rate for the next 5 years. I did the very simple math here. That gets them to around $220 billion in sales. Wall Street at the end of that period has them at $180 billion. It shows AI is going to drive that significant upside that's still above market expectations. And the last thing we have that's worth noting, their capital expenditures for this year, they forecast them at a midpoint of $40 billion, should probably come in over that. Wall Street's expectations was $36 billion. Last week, we kind of broke the seal on semiconductor equipment with Lam Research. We're going to break the seal a little bit more, but this week you see the environment's getting better there. So David, you know, the bottom line with Taiwan Semiconductor, I talked about them being a bellwether. This is a very conservative company that's been through every single cycle. If they're taking all these growth rates up, if they're taking them up, not just in 2025, which they have, but the next 5 years, it's because they're talking to the people holding the purse strings. They're talking to Microsoft. They're talking to Amazon. They're talking to these hyperscalers. And that's where these companies' plans are. And as we noted, developments in AI in the past month or two are probably even accelerating these plans. So I look at this, I was surprised the reaction wasn't higher yesterday, because what they said is about as bullish as you can get. I was very astounded by it, and it continues to cement my belief that the strategy the markets we're looking at are on the right track for what the markets go wake up to as this year goes.
Yeah, we've talked about a big risk for the entire AI space of what could cause a big pullback is, you know, some whisper of slowdown in spending starts to creep in, and we're looking for that first sign of it in kind of companies like Taiwan Semi. And to your point, it seems like we kind of got the opposite of a slowdown. So no signs yet, although we will keep our eyes out. When we first brought Taiwan Semi into the portfolio, one of the questions I asked you was, you know, it's impossible to talk about Taiwan without talking about China and the potential risk there. At the time, you said, you know, this is it's a well-known risk. It's baked into the valuation. We feel comfortable, and it's proven out in the short run that, the stock has moved higher since we bought it. This week, we also got more news involving AI in China. President Biden, as he's walking out the door, dropped some new regulations. So let's just move into that story a little bit. If it impacts Taiwan Semi, we can touch on that. But more broadly, what are these new regulations, and is that a new risk that has now entered the table? We've always talked about where does China sit and how big of a risk is that? We've talked its impact on a company like Lam Research. Did that risk just get turned up, or is this kind of the same as what we've been operating on?
Yeah, it's a great question. Background, export controls. First one was in October 2022. We got more a year later in October 2023. Last July, these export controls were further refined, and that led to a massive sell-off across the semiconductor space. So despite the rise of AI, semiconductor stocks, they dropped 25% in a month. And that's from the SOX index, which you can track it. Since July 10th, they're down 15% as a group. The market's up 5% that time. So that's 20% underperformance. So that kind of sets the table for everyone of how big a reaction this could be. So what are these new rules? Well, essentially, we've set controls for countries specifically. Let's call it what it is. It's targeting China, right? And China's still getting chips. There's still loopholes where they're able to get chips. So these newest regulations kind of aim to close those loopholes. And what you have, it's kind of like defense contractors. If you're a Lockheed Martin, you've got approved companies that you can sell your F-35 to. You've got companies that, you're going to need extra layers of approval. And then you've got companies you can't sell to. Similar to that, we've got tier one countries that there's about 18 of them, and they get unrestricted access to AI chips. You've got tier two countries. That's almost every country in the world. It's, 80 to 90% of countries, and they're going to have quotas, and there's going to be an agency that is going to essentially approve these sales. And then you've got tier three countries, which is China, Russia. They have the highest restrictions possible. So what are the implications of this? Well, I think we do have some clear winners and losers. On the winners end, you'd have the hyperscalers that we've talked about, Microsoft, Amazon, Google, because one of their biggest competitive dynamics is you have these smaller cloud companies focused on AI. We call them neo clouds. It's going to be a lot harder for them to operate. Another probable loser that almost fits in the hyperscaler category of its size is Oracle. They were making massive investments in companies like Malaysia that are now on that tier two list. So they might not be able to keep up with their rivals. Another loser is going to be NVIDIA. NVIDIA, I talked about in the last podcast, they're really executing well, and they're setting up for a good back half of 2025. I could see the front half being a little more shaky. They were down about 15% at the peak, and I was kind of starting to go, is this just interest rates? Well, I think news was kind of leaking of, the size of these restrictions. And these restrictions are really going to remove loopholes that chips that previously would have gone to a country like Singapore and ended up in China. That's going to essentially be kind of removed by these frameworks. Now, the companies themselves, they're obviously not happy. And, you need to balance between two areas. Of course, a company that's seeing sales go down is not happy with it versus, what might be best for the country. Mm-hmm. I would say the greatest critique of regulations like this, as you noted, it was kind of dropped on the way out the door. Companies had close to no input as they were complaining about. They get 200 pages of regulation. And I think there's going to be some refinement from the Trump administration coming in. Things like government agency needing to have very strict oversight of some of these controls. They might not move fast enough, especially when NVIDIA is moving to 6-month release cycles. Your approval might take longer than the release cycle. So I could see Trump refining that. In terms of really big takeaways, I still don't think we've seen what the Trump administration strategy is going to be. They might lean more into these existing regulations, or they might use them as a bargaining chip to get concessions elsewhere. So that's going to be, when we find out what the Trump administration's true intentions are, that's when we're going to see the biggest reaction to this. But in the meantime, I don't think this changes the trajectory for most companies. The companies I mentioned, like Oracle, NVIDIA, are probably the biggest near-term losers. But for most the stocks in our portfolio, I don't think this presents a big shift. Maybe could take away a couple percent of growth in the year ahead, but they'll probably surpass that with other opportunities.
Yeah, I mean, I think I'm not envious of the position of anyone in Washington trying to figure out what's the perfect thing to do. It's when you have a technology that's changing so quickly, companies that are growing so quickly, it's a very hard thing to do. And to think that we're going to nail it and get it exactly right is wishful thinking. It's going to be a process. Hopefully we just don't make any large errors, but I think it's impossible for us to sit here and say, here's exactly what we should do to, keep the country safe and keep American companies thriving. It's a tricky balance, but one, again, we will continue to watch and talk about on this show.